Today's day number 67 of the $1,000 account challenge, and we are up $511 in the account, or 4.62% of the total portfolio balance. Now, I need you to pay attention to this video because there's a lot of good information that I'm about to give out to you. If you don't know, my name is Gates. I'm taking $1,000. I'm day trading options to see how far we can grow this account. We've made over $10,000 profit in this account since starting the challenge. Today was a one and done type of day. It was a larger gap up on the overall market, which I'm not a big fan of. However, Meta, $10 gap up from 506 to 516 this morning, let me know that Meta potentially had the power today to move to the all-time highs. So on the daily chart time frame, your all-time highs are 523.5. Today we get a move to 523.85. So we do indeed get that move to those all-time highs. Let's break it down straight off of the day trade watch list. Meta was a long idea above $517. Now on the 1 minute time frame, we get the break of 517 literally the first minute after market open. And not only do we get a break of 517, but we get a run all the way up to $523, which is only 50 cents off of those all-time highs. This to me is screaming that this is enough confirmation to take this long on the very first dip offered. Why? Because you have traders that are just like me on the sidelines watching this thing run and saying, I'm not going to chase this move. I'm going to wait for a dip. The first dip offered after a larger move like this typically does give you follow through. So how would I have known to take the dip entry right here? Well, I utilize a tool known as the Fibonacci retracements tool. I'm going to drag a Fibonacci line from the bottom of this candle, the start of the rally, all the way up to the peak of the rally, and that's going to give me my Fibonacci levels, which are potential entry points to where the stock could dip to on a pullback. Notice the 23.6 level right here starts to hold as a point of support. I'm not taking that dip entry because it's not really a dip, right? We're just at those highs still. The next line down is going to be your 50% retracement line, and that is indeed where I decide to take the dip entry. Your next level beyond that is 61.8. So how did I know to take the entry here at 50% versus 61.8%? The truth is, you don't know. I did not know that this was going to bounce at 50% and move up to the high of day. This very well could have fell to 61.8%, or very well even retraced down to the 78.6% mark. So in reality, in real time, you do not know if this is going to continue to dip or if it's going to rally up to the high of day. But what I do know is that if you do not take the entry, then you miss out on the opportunity, because scared money does not make money. So how can we take the entry in a way where we mitigate risk, meaning we take on as little amount of risk as possible, yet still capitalize on being in a trade if the stock decides to move in our favor? The answer is we size down. Guys, I was only using around $1,000 capital on this trade. And if you look at my portfolio balance, it's $11,000 balance. $1,000 capital, that's less than 10% of my portfolio that I was putting onto this trade. Now, this falls right in line with the traditional risk management strategy that I do teach within the Discord server. We gave alerts out on this trade, and I'm going to walk you through that. Meta, looking good so far, stand by. This was posted at 9:32 a.m. Meta loaded the contracts. I give you the contracts, 9:33 a.m. We're not taking the entry yet, no position yet. This is not far from those all-time highs. Wait for a pullback. Now, the next alert that comes out, we do indeed get that pullback. 9:39 a.m. Meta took entry. These are your contracts. This is my fill price. 9:39 a.m. That's going to timestamp right here on this dip. We pretty much bottom ticked this. I purchased my position at the bottom of this candle when it was a fully red candle, near that 50% retracement line. From here, it's just trade management. After seeing how quickly those contracts moved, I think that we can get over 20% very quickly. And that's what I said. If this bounces from here, we can get over 20% fast, right? Especially if this thing runs back to the high of day. Now, I said that my stop loss would be at $517 though. Why would I risk all the way down to $517? Doesn't that mean that I could potentially lose more on this trade? The answer is yes. However, Because I was in with a mitigated risk size, remember, I was only using $1,000 capital, I had room to average into this trade if it continued to dip. So let's present this example. Meta dips down to 61.8, still above my stop loss price point. I'm red on the trade, but I have more capital that I could average into this trade to lower my cost basis, and then maybe this does bounce from there and I'm back green on the trade. Or maybe Meta decides to dip even further and still is holding above $517, but just mostly retraces the initial move, and then we average in, right? Still, same thing, lowering the cost basis by averaging into the trade at a lower price point, and then we get the bounce, and now we're back green on the trade. Now, there's no guarantee that this would bounce, but I had a plan, and what allowed me to take this initial entry when I did and risk off so much down to 517 was proper position sizing. I need you to rewatch all of this that you've seen so far because this truly is course quality content. I'm giving you diamonds right now. So like I said, after we took the entry from there, it's just trade management. Meta now up 20%. I'm not taking my profits at 20% because of the speed of these contracts, how fast these contracts are moving. You can take profits or hold. That's up to you. Now up 30%, now up 45%. That's at 9:42 a.m. and I closed out right there. Now, how would I know to close out right here? That's pretty much the top tick of this move. How would I know to take profits at 45%? Well, I utilized the strategy known as the high of day and low of day trading strategy, which is a strategy that I detail in my podcast called Trade the Flow Podcast. Give it a listen if you haven't heard it yet. In one of those episodes, I detail several different profit-taking strategies, one of them known as the high of day, low of day trading strategy, and that's what I utilized here to take my profits. Back to the alert room, Meta fully closed out. I remind you of the contracts. I remind you of my fill price. I remind you of my sell price, now a 45% gain, and we bottom ticked that move. We could have gone back in on this thing several times as well off of the 520 mark, held right here for the run up into the new all-time highs, held right here for the run up close to the high of day. So another 30% probably offered right there before it eventually broke down and started to treat that area as a point of resistance and has now since reclaimed and ran right back up. So a lot of trading happening around that 520 mark. Please do not let this video flop. This is such good information that I'm giving you right now. If the video has helped you out, press that like button for me and consider subscribing to the YouTube channel if you haven't done so already. It is just the best way to support me and this type of work that I do. Plus, it's free. Thank you so much for your time and watching this far, and I hope that you made some money on the trade. Take care, and I will see you next week when we continue the $1,000 account challenge. Cheers.